Hi there, this is Christian Dye with Mike Stewart, and it is January the 14th. We are here to give you the real estate and a little bit of stock market update. For the first month of January, oops, we made a mistake here. It should say 2021. So it's January 2021. So Mike, are you still there with me?
Hey, how you doing? Sorry about that.
Perfect. No, I just want to make sure you're there. I just want to make sure you're there. That's all. Okay, so let's get right into it over here. What is going on? First and foremost, we wanted to just say a little disclaimer that the information we're going to give today is not to promote the buying or not buying of any real estate. We advise that you do your own research, work with trusted people before you make a decision on your own. So I want to talk about what the forecasts are. So right now, real estate is saying, the data is showing that the forecast for 2021, there's two camps. There is the bulls and there is the bears. And what the bulls are saying is that Canadian real estate, CREA, says that we should be going up by, plus 9.1%. Now, the REMAX is saying plus between 4 to 6%. And Royal LePage is saying plus 5.5%. Now, these are, of course, due to different factors in housing trends. So now let's take a look at what the bears are saying. So the bulls are optimistic, and the bears, of course, are slightly pessimistic. So the bears, RBC and Scotiabank, think it'll be pretty flat. They think that we're going to have flat growth. Fitch Ratings believes there's going to be a slight decline between 3 to 5%, and CMHC has the heaviest decline, saying between -9 to -18%. But that was also their stance the year before, which they were wrong on. They're sticking by their stance. So I thought this would be a really good starting slide to tell you that it is confusing. It is very confusing whether market is going to go up or down. So what I want to do with Mike is to strip out some of the confusion. So first of all, these stats are based off of all of Canada. We're talking Winnipeg, we're talking Nunavut, we're talking Quebec. So we have to be very, very careful to think, oh, is Canadian prices going up or down? Vancouver is such a unique market over here. I would be very, very careful to rely on any information that paints Canada as one lump as a whole. So having said that, let's take a look closer at Vancouver real estate. December sales were up 22.1% over the same time last year. What does that tell you? 22.1% more sales means there was pent-up demand. Typically, people don't do a lot of buying and selling in December, but because of that pent-up demand, there was a great demand in the market. Now, analysts predict when the sales price goes down, when you have a ratio of sales to active listings below the number 12, okay, when sales to active listing is below a 12%, that is when you get downward pressure. And of course, if it's above 12%, you have upward pressure. Where were we last month? 27.9 on detached homes, 40.1 on townhouses, 23.9 on condos. Where are we currently? 35.2% on detached homes, 50.4 on townhouses, and 33.1 on condos. What does that mean? Not only are we significantly above the 12% mark, we are trending upwards. In my view over here, in 2021, we are going to see the real estate market in the greater Vancouver area continue to rise. So, stock market update. Should we be putting our money in stocks or real estate if we were an investor? I'm both. I'm both a stock and a real estate investor. What we know about the stock market is we are back to pre-COVID levels. So there was an amazing opportunity in the stock market in 2021. All of the easy money was if you were to put money, new money, during the crash of March and April. But now we're back to pre-COVID levels. Tom Lee at Fundstrat believes that there will be a cooling off because we went up so quickly, so fast in Q1, but then there might be a pullback. Then by the end of the year, when the vaccine is fully rolled out and the economy is back up and going, he believes that we're going to finish the year strong. Is there an opportunity in the stock market? Yes, but there will be volatility. Me personally, I'm looking at real estate. So now, Mike, are you there?
Yes, sir.
All right, Mike, first thing I want to know is what is happening on the front lines of real estate in the greater Vancouver area?
Yeah, it's starting to get really busy. Single family houses in East Vancouver are extremely hot. Lots of demand for that product. We're seeing situations whereby, houses are getting anywhere from 10 to 20 offers in some cases. Larger sort of ground oriented townhouse type options are doing extremely well. Again, I was looking at a small duplex in Strathcona, and it listed at 1.19. One of the units, they had both units listed for sale. One listed for 1.19. It sold for 1.425. The other side, there's a lower level unit which listed at 899, sold for 1.085. Or sorry, 1.185. So we're seeing significant demand, and we're starting to see upward pressure on price, and that goes back to what we were discussing about the sales ratio. When we've got an elevated sales ratio above 12% for an extended period of time, then you start to see upward pressure on price. And I would argue that this is caused by the extremely low interest rates. We're seeing variable rate mortgages for insured mortgages. So those are mortgages whereby somebody put down less than 20%. We're seeing mortgage rates of 0.99%. So that's less than 1% interest for a mortgage. For non-insured mortgages, so that's for people who are putting down more than 20%, we're seeing mortgage rates of, I've heard as low as 1.39. I'm in the process of buying some properties right now for myself for investment, and I'm getting sort of quotes of 1.59, 1.69 for 5-year fixed rate mortgages, which is just absolutely fantastically low. If we see inflation get to the Bank of Canada's target of under 2%, and you've got a 1.59% mortgage, you're quite literally being paid by the big banks or by your mortgage lender for borrowing that money. So things are very active. Downtown Vancouver, as I mentioned last time, was quite soft late last year. And the middle of last year now is starting to perk up, and we're seeing a lot more demand. We just relisted the listings that I had that were very quiet last year, and one of the listings had no showings. This year, we just relisted these properties in the last 2 weeks, and a lot more showings. We're starting to see offers coming in on things that we weren't before. So yeah, the market is really starting to perk up in the downtown core. North Vancouver single family houses extremely active. Basically, I think that going forward, we're just going to see a broad-based surge in demand for all property types because we have those extremely low interest rates. And as the vaccine gets rolled out, we go away from what I would term the 90% economy that we're in right now, where people in food service or travel or other businesses are not working, not making income. But as more and more people get vaccinated, people start traveling, people start going to the bar, people start going to the restaurant in large numbers, and more people start feeling comfortable getting out, you're going to see an uptick in demand for rental units from people wanting to rent those, which I think will push up rents and make some investments that people are making now and in rental and investment properties, look very wise. Rents have come down for downtown Vancouver and for other areas across the region during COVID because people have moved away from smaller units because they feel uncomfortable being in high density crowded places, and also because younger people who had their own places are moving home to be with their families, and people are moving into larger spaces further out. But I think that is going to reverse. And if you look at what's been happening with the stock market, prior to the announcement of the vaccine, oil stocks were way down. airline stocks were way down. All these stocks were way down, whereas all the remote working stocks were way up. But as soon as a vaccine was announced that was credible, you saw a surge in oil stocks. You saw a surge in airline stocks, because we're going to get back to the way we were, and things are going to be okay. We're going to see a rollout of this vaccine, and once the vaccine proliferates, and once we see the vaccine distributed and everybody's got it, the economy is going to start booming, because we've got ultra low interest rates, and the economy was doing quite well prior to COVID-19. The real estate market was doing quite well prior to COVID-19, and the Bank of Canada and the federal government have both signaled that they're going to allow the monetary and fiscal stimulus to continue well after we've got a vaccine, because we've got to make up for lost GDP. Make up for the GDP that was lost during the COVID-19 era. So I think that those who invest now, I think, will do quite well going forward. And I'm extremely optimistic going forward about what's going to happen with the market. And
No,
go ahead.
I was just going to say, with what is going on, I definitely echo, because of course, you and I have been in many conversations. I also am looking at real estate right now, but as are family members, as are many of my clients. And what I'm finding is that they're having trouble finding product. There
Agreed.
seems to be a supply shortage. And when there's a supply shortage and a demand and a heavy demand, you get upward pressure on prices. I know multiple people that actually put in offers and were outbid, and they were offering either asking or slightly above asking in certain areas. So I kind of find that anyone who is arguing that Vancouver real estate it's not heating up right now, I think that they must be in one of those small pocketed areas. And I guess this is the thing that I'm finding quite attractive. I myself am looking at properties that were at 2017 pricing. They were similar pricing to 2017. So I guess this is my view. I'm looking at something that was bought in 2017 and is now still at that same price of 2017 or less expensive. Now I'm saying, how long will it take to get back to those 2017 pricing? I've already done an analysis, and I've taken a look, and my projection is on the outside 5 years. 2017 plus 5 years from now, well, that's a full economic cycle. So what is the chances we're going to get on certain products to get back to their 2017 level? So 2017 to 2025, that's 8 years. What is the probability that the pricing of certain products will get back in 8 years? Very high. It might be 1 year. It might be 6 months from now. And I think we are in a window of opportunity, especially for the buyer who could afford, who might not have been able to afford it in 2017 at 2.8% interest rates. Same pricing, 2021. Now we're at 1.6% interest rates on 5-year fixed, and is basically predicted not to be increasing too quickly over here. But that same person will probably have higher income than they had in 2017, and perhaps that's also growing. I think across the board, a lot of people are going to realize that, and that will cause more of this upward pressure.
Absolutely. I 100% agree. And, you really bring up, you make a good point. 2017 was, a banner year for real estate in Vancouver. And, a lot of that was to do with money coming in from overseas, but interest rates were much higher then, and interest rates are low. And right now, one of the major drivers of the real estate market, which is immigration, is on hold. No new people are coming, and foreign students who, support, a lot of revenue properties, a lot of furnished rentals, a lot of unfurnished rentals. Those guys aren't coming. So right now we're seeing this, upward pressure on price, and we don't have a lot of the components of the demand for Vancouver real estate. Another thing I'm looking at too is, a lot of the properties that we've been discussing here in the city, not many of these are cash flowing, but myself personally and a realtor that I work very closely with, we have been looking at properties in the Okanagan and Alberta. And the Okanagan gets cash flowing properties, and Alberta gets cash flowing properties. The only concern with Alberta, though, is what's the future of oil? But I think we'll save that for another discussion.
Yeah, I agree. And the other big thing is vacancy. You've got multiple issues with Alberta. You do have great inexpensive prices, but there is another layer you have to be careful of. Mike, can you see the stats over here? Okay.
Yep, just bear with me here. Yep, got them right here.
Perfect. No. So on my screen, I believe I'm sharing the stats. I just wanted to make sure that you could see it so that our participants can see it. But I guess I just wanted to highlight a couple of things on this last statistical report, which, of course, if you email Mike Stewart at the end, he can give you this full report if you want to dissect it yourself. But the 1 year change, Greater Vancouver, it shows right over here on property benchmark prices, 5.4. If you look at it just sort of as an average. But then when you dissect the individual areas over here, and as well, you dissect it by detached homes and condos and things of that sort, one of the things I'm noticing, many of these things are in the double digits. Like
Totally.
we're talking, there is an increase. Coquitlam, 10.7%.
Or look at this, or like Bowen Island, 28.7%. Sunshine Coast, 22.4%.
That's right. That's
and
right.
these are the areas that we identified before, where this is where people are moving in COVID because they feel, secure there.
I 100% agree. And I think what we're finding over here is there is a trend going upward. And is real estate a good buy? Take a look at the 10-year return. The 10-year return, which is the last column over here, okay? That's how much it has gone up. If you were to dissect this using the rule of 72, of course, this over here are high numbers, like 6-7%, 6-7% ROI year to year over 10 years over here when the numbers are this high. And remember, your home is a capital gain tax-free investment, capital gain tax-free. So when we take a look at these numbers, and I'm going to switch down to condos and townhouses, the one thing I notice is that the numbers are in the single digits. We now have these townhouses in the single digits, and in the condos over there, some of them are even slightly on the negative. Some of the prices have even gone down a little bit. So what I'm feeling, and I don't know if you're seeing this, but the detached home is a hot commodity right now. There seems to be a lot of a low supply, but a high demand. Would you say that, Mike?
Absolutely. Absolutely. Yeah. They're not making more single family houses. They're not making more single family lots. If anything, the supply of those is constricting because every time a new condo building goes up or a new duplex gets built, those are made up of single family house lots. And, you see the prices of condos going down over COVID. I would argue this is the time to buy that kind of product if you're an investor. You know what I mean? If you're an investor, don't necessarily look at the things that are up now, look at the things that are down, because in future, what is down is going to be up, and that being condos.
Yeah, and if you take a look, something that, of course, me and my family are exploring is this idea that I live in a house that's very, very, very hot right now, low supply, high demand. But now I'm looking around at things that are 2017, but lower than 2017 pricing. So I'm looking for some discounts on the upgrade. And if you could afford it and the rates are low over here, it's not a bad strategy. Which brings me to my next point over here. Should I be doing a move in real estate, right? My philosophy with my financial practice has always been money always increases best when it is in three buckets. One is, yes, we should have exposure to the stock market, but we should also have exposure to the real estate market. And all of my clients love real estate, which is why they all tend to gravitate towards me as opposed to a traditional advisor. I like to integrate real estate. I like to encourage people to buy more real estate, whether it be in a holding company or whether it be personally owned, whether it be residential, whether it be commercial or multi-unit. And I always believe that we should have the availability of cash or fixed income so we can capitalize when there is an opportunity. So, if you've got a question, throw it in the chat. You could start to formulate your questions and we'll field it in about 5 minutes in the chat over here, okay? But I'll give you a perfect case example over here. Here's a type of clients that I often come across. They're looking for a good financial advisor. Maybe they've gone to one of the big banks, and the big banks, they're kind of limited. I'm helping you with your RSPs and your TFSAs, but they need help significantly beyond that. They're a newly married couple. They both own condos. They've got good incomes. They want to start a family soon, and they want to upgrade their home. But now they're trying to figure out, what do we do with the condos? Do we sell both and upgrade? Do we keep both as rentals and use our savings for a down payment, and now we own 3 properties? Do we keep one as a rental and sell the other one for the down payment? And if so, well, which one? These are pretty big questions over here. And a lot of times, beyond their traditional financial planner, they don't do the analysis that we do in order to figure this out. So, at Latitude West, what we do is we would take a discovery meeting to figure out what it is they're trying to do. Then we would navigate different questions and different options for them. And then we would implement a strategy. We would do a cost benefit analysis to compare the 2 homes. We would see what the net advantage is by doing this. And this is the type of work that we do with our clients, whether it be an investment property or a personal property. We can show what it looks like in retirement by having 2 or 3 properties. We could show what it looks like on the revenue side. So what I'm saying is that people should be using advisor when they can't do things on their own, but are they using the right advisor? Are they using someone who can integrate real estate if that's what they want to do? So, my conclusion over here is always this: don't try to time the market. I do think that rates are going to stay very, very low and demand will be very high on the real estate side. How does this integrate with your stock portfolio, or how does this integrate with your other investments? That's the part that I can help you with to figure out, should I be taking some money off the table with my stocks in order to buy real estate? Or should I be leveraging off my real estate to buy more stocks, or leverage off my real estate to buy more real estate? These are really, really great questions. So what am I doing with clients over here? Reviewing their strategy and ensuring they're taking advantage of any opportunity out there in a very, very safe way. So, once again, we do this session once per month. Hot areas to invest, Vancouver real estate. Our next session is on February the 11th at 6 p.m. The way to register, like most of you know, because you registered for this one, is to go on my website, latitude-west.ca workshops. This should be up there by now. February the 11th would be our next one. And right now, what I want to do is, as any questions are coming in over here, by all means, put your questions in the chat. Mike and I are going to field your questions, but we're going to land over here if you're ready to connect. And what we'd like to do is to say that, you could reach me at assistant@latitude-west.ca, and you could reach Mike Stewart at mike@mikestewart.ca or at 604-763-3136. I highly recommend, if you want to do a bit of an analysis over here, that you go to email Mike in order to get the full statistical analysis of what's going on in Vancouver, so that you could dissect the numbers yourself over here. Okay. So Mike, do you want to start with some of these questions over here?
Yeah, absolutely. We've got some great questions here. Andrew, thank you very much for the first question. Andrew's question is, in case you guys can't see it, is, can you talk about the potential disparity between condos and single detached in terms of your 2021 predictions? I personally think that, of course, this is a prediction and my crystal ball is as good as yours. So, make your own decisions on this sort of stuff. But I think that overall, you're going to see demand across the board for everything because of these incredibly low interest rates. I think that single family houses will continue to have, extremely high demand for them. And you're going to see price appreciation for them, particularly in areas that have good schools and areas that have lower prices. I think you're going to see condo prices maybe go up faster than that of single family houses this year, because you're going to see a lot more demand from renters for rental properties. And I think rents may start going up later this year, and that could make condos a lot more attractive. And I think as people get vaccinated and as people become, as more and more people get vaccinated in general and individuals get vaccinated, more people are going to feel a lot more comfortable with living in urban areas. Because, if you look at what's been happening up until COVID, people were leaving single family houses, leaving the suburbs and moving into the core. And I think that's going to continue, particularly because many people nowadays are not having children. They're not getting not getting married, and they want to live a single life. And, the single life is not as good in the suburbs as it is in the core, I would argue. So you're going to see a lot more I think you're going to see condo prices really pick up and potentially catch up, maybe even catch up with the gains of single family houses. Before the foreign buyers tax, single family house price appreciation was significantly higher than that of condos because a lot of overseas money was going to single family houses. After the foreign buyers tax, that switched because there was not as much foreign money going into big money single family houses, and condos are very much designed for a local market and affordable to a local market, more so than single family houses. So it's going to be interesting to see what happens once COVID passes into the rearview mirror. And I think that single family houses are going to always have demand because they have a supply that is constricting. But I think condos, are going to do quite well.
And Mike, let's get to this next question here. Do you see adding laneway homes to your house as a benefit still, or is the regulations going to cause problems? What do you think about that?
I think adding a laneway house to your house is a fantastic return on investment. The key, though, is to look at what kind of lot you have, what the zoning is, what is allowed. But if you can build a revenue property that pays you $1,800 to $2,500 per month, and you can build that for $250,000. So let's say a laneway house costs you $250,000, and let's say you can get $2,000 a month gross rent out of that. Okay, so $2,000 times 12 is $24,000. Now, to get the cap rate, you divide that by the cost of the investment. So $250,000, so $24,000 divided by $250,000, that's a 9.6 gross cap rate, or 9.6 gross return on that. And in my view, anything over about 5 or 6% in Vancouver is fantastic because it's so rare. So I think based on the lot that you have, based on the zoning that you have, I still think a laneway house, if you can have it built in a cost-effective manner, is a fantastic idea and a fantastic investment, and I would do it all day long.
Yeah, I'm going to field the next one. What is my opinion on the allocation of how much should go in real estate, stocks, and reserve? What would I recommend? That's not an easy question to answer because everyone is different depending on the stage of life. And here's my thing, depending on how much existing real estate you already own. But so I do want to answer it using two other examples. One is the Canadian pension plan. If anyone ever actually looked at the Canadian pension plan on what they receive as an ROI, it's very, very high. They've got all these money manager professionals because they, of course, have to pay out CPP when we retire. They have 22% in reserve cash, 34% in some form of a real estate asset, and the rest 44% in equities. The other one that I want to compare this to is the Tiger 21. The Tiger 21 are the richest investors in the world. In order to be part of that group, if you guys want to Google it, Tiger 21, you need a $10 million minimum investment to be part of the group. Now, they don't invest your money. It's kind of like a club. But the average person in the club is $100 million. But what they do is they publish where those guys are investing their money. Tiger 21 had 35% in real estate, about 20% in accessible cash, and then they had about 44% in equities. Now, I would not say keeping 20 to 25% in cash is a good idea in this environment right now. I have other ways where I could access the money, and that's the important part. Can I access the cash without selling the stocks and without selling the real estate? That's my recommendation. What is my personal criteria? I'm a big real estate guy, so my real estate portfolio is larger than my stock portfolio, but I would say that I have accessibility to about 20%, about 20% of my entire portfolio right now if I needed to free it up. So I hope that answers your question a little bit over there. I really like this next question, but I think, Mike, you're the one who's going to have to field it.
Yeah.
What effect do you see the federal foreigner tax to be applied from spring 2021?
I don't think it's going to have any effect here in BC because we already have the foreign buyers tax. I think that it is going to be bad for places like Alberta, and I think it's going to be very bad for the Maritimes because the Maritimes does get some people from Europe buying vacation homes and stuff like that. I personally think that it is just a political fig leaf on the part of the current government to hide the fact that they're no longer doing anything on housing affordability because they are using the real estate market as a sort of safety balloon to keep the Canadian economy from sinking. And they do that by borrowing massive amounts of money basically what the federal government does and the Bank of Canada do, and they did this in 2008, 2009, is they just cut interest rates dramatically so that it causes the real estate market to surge, and that increases tax receipts, but also more importantly creates massive amounts of stimulus in the Canadian economy to keep it from going into a deflationary spiral. So that's, I think that's more politics than it is something that's going to be,
impactful.
I think, it's not going to be impactful. It's a political nothing to help the federal Liberals get reelected in the next election.
Yeah.
The next one is a studio at downtown core a good investment? Absolutely. I like studios a lot. You can get very good revenue from them, particularly if you can furnish them, but you have to buy in the right building and you need to buy good quality product. There's a lot of buildings in downtown Vancouver that are showing their age, and a lot of these buildings are the less expensive ones that you see when you go on realtor.ca, but a lot of these buildings are junk. And in a lot of these buildings, they have serious insurance deductible issues. There's one particular building, I'm not going to name it, but it is a building that has lots of one bedrooms and small units, and it allows short-term rentals, one of the few buildings that does. The insurance deductibles just hit $750,000. So if you own a property there that's say worth $600,000 and you don't have the right insurance and your tenants cause a leak and it causes $749,000, you personally are responsible for that.
Wow.
Personally. Yeah.
Wow.
So be very, very careful when you're choosing which building to buy in. If you're going to buy an investment property, you make sure you have a realtor who knows the product and knows the way to steer you right, because the insurance deductibles that is a catastrophic loss. Okay, if you do that wrong, and you have an insurance claim, a lot of these buildings are at $250,000 water damage deductible. This one particular building is $750,000, and I think you're going to see a lot more buildings having that. The other thing that is a catastrophic thing with a lot of these buildings in downtown Vancouver is the building envelope and what's happening physically with the building. A lot of these buildings are getting to be 20, 25 years old, and that's when there's major work that comes up. So you might be able to get this unit for cheap. You might be able to get good rent, but all your investment pro forma is going to be completely blown up if, in your second year of ownership, the strata says, okay, we need $30,000 to renew the envelope, or we need $50,000 to do the, the parking membranes or whatever. So be very, very careful and get a good realtor who's qualified and knows what they're doing with that product, because you can get burned. And I've seen it happen to people.
Sure.
So be very careful.
On that note over there, I do want to cap it off to be respectful for people's time. If you are listening to the recorded link, if you signed up, we always send the recorded link. Feel free to reach out to us if you had a question you weren't able to ask it. Like I said, if it is a financial question where you wanted to do some planning around your investments in real estate, feel free to connect. If it was a direct real estate question where you needed a good realtor, or maybe you just wanted to assess the value of your home to see if it makes sense to sell in this market, feel free to reach out to Mike. So with that, Mike, let's end it off here. We will see you guys next month, and thanks so much for coming out.
Yeah, thanks, guys, and Happy New Year, and thank you for all the great questions.